and welcome back to Dukascopy TV. I'm Monica Gibson. Jean-François Owczarczak joins me back in the studio for our Monday programme. Together we'll be looking at the charts to see some of your favourite currency pairs. Jean-François, welcome back to the studio.
Thanks, Monica. Thanks for having me back.
Now, as you've pointed out to us, it's going to be it's the start of earnings season this week. So what sort of key levels should we really be looking out for, would you say?
Well, so we're going to start with the S&P. We usually start with currencies, but let's go on to the S&P. And it's a bit of a double-edged sword. Some are saying that the earnings might help us out of the current correction. Others are saying that we will see the first impacts of a stronger US dollar flowing into US earnings. So it could trigger the worst or save us out of the current correction. So we're here back on the FinGraphs Dukascopy mosaic. We have euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months Treasury futures. And we'll look at the 3 months S&P futures. Well, we've been in an uptrend now for the better part of 4 years. The last time we've had an important dent was in 2011. We actually broke our daily corrective targets and into impulsive territory. And apart from that, all these intermediate corrections that we've seen over the last 2 years, and the one we're having at the moment is similar to these, are only corrective, or have only been corrective. So that means, and maybe I could show you here, that means that the daily did go into a bear trend, but only a corrective downtrend. And you see here you have the support zone, which is the corrective zone, and the lower boundary of this corrective zone in all these moves was never triggered. So we're not quite there yet here. We came into the zone but didn't go below it and moved up earlier this year. We did it twice in 2013, and we also did it twice in 2012, which means that these corrective targets have held as a very good support over the last 2 years. And so, given that we're now pretty close to these corrective targets, I would suggest that we really need to see them broken to the downside to confirm a stronger move down. So if we analyze what a corrective target is, it usually lasts, let's say, a month and a half to 3 months, and it finds its way down to the corrective targets. And it usually holds these corrective targets and then moves back up. So as long as we're not below here the 1871.65, or we could round that up to 1870, we're pretty much still in what could be considered a correction. And so as long as these levels hold, we will not become more negative for the time being. So we're in an uptrend on the weeklies. There may still be some potential. They're very far-fetched because it's I2. So yes, we are in an exaggeration. Risk reward is a bit stretched, and it needs a lot of conviction to see the levels move up above 2,200. Now, in that context, the medium term hasn't broken down yet, and so we would see strong support here between 1870 or 1871.65, or just around there. Mm-hmm. Now, as we were mentioning last week, the hourlies are still heading down, and we were saying that we're pretty much here last week, and we were talking about a retest of the recent lows. Well, we did see that retest. It actually went lower, and then actually made it down to impulsive territory, achieving targets. Now we're pretty much here in market stress, meaning the two envelopes are touching each other, and we also overbought on the oscillator. So although we cannot confirm any reversal here, we've reached quite a point of exaggeration. Mm-hmm. So we might see a bit of a correction up towards the beginning of this week.
Okay, indeed. And the currency-wise, we also have quite a lot going on.
Yeah, we'll move them. We'll move to them straight ahead. But just remember, 1870 here is the important level.
That's the important one. Indeed.
Now back into the mosaics, and we'll quickly look at the euro and at gold. If you see here, we're quite overextended on the euro. We've reached our impulsive targets. There may be a bit more to go on cable, maybe a bit more to go on Australian dollar, and pretty much extended on dollar Swiss, a bit more on dollar yen, and on gold similarly with the euro. It's still in a downtrend, but it still has a bit more to go. So we'll focus on euro dollar and on gold So here the investor's view, weekly, daily, hourly, and let's focus on the daily. And last week we were reaching the 12th consecutive week of lower prices. And so we were saying that risk reward had deteriorated and we could expect a correction up. Well, the correction up had already started actually. And so we did see a bounce during this week. We're pretty much exhausted on the impulsive front. However, there's still some time to go. And so it is possible that this move goes into impulsive 2 targets, which would bring it down in the low 20s over the next few months. So we think the daily trend is still down and it's not finished. Now, if you look, and that is a concomitant with what you see on the weekly trend, which still has quite a bit of potential for the next few quarters. Now, if we look at the hourly, it did correct up. It made it, I think, up just below the 128 level. The envelopes have flattened out or slightly down yet, so we have a bear indication again. Now, usually these corrections do linger on for 10 days to 2 weeks, so it might not be finished and we might move up again a bit here. The corrective targets, if I remember right, when they were still on the screen, are just below 128. So as long as we stay below 128, we wouldn't be too worried about the direction of the downtrend here. And so we might move back up a bit, retest these levels, but as long as we stay below them, we believe a resume downtrend is still in the cards. And so, just to confirm this resume downtrend, I'll quickly flick to a trader's view, which is a 60 minutes, 15 minutes and 4 minute chart, and look at the 60-minute chart. And basically it's telling us that we're in a correction down at the moment, and this would accelerate to the downside below 126.14. So as long as we stay above that, we are in this correction up. If we were to move below it again, then we'll see a reacceleration to the downside. Okay. I'll quickly touch on gold, which had quite a nice correction up last week. We were also saying that risk reward had deteriorated. We probably weren't expecting that much of a bounce, but it seems like many technical analysts are seeing a triple bottom here. So that gives a bit of a ray of hope to this downtrend. We still believe it's a downtrend. It still has a few quarters to go and it still has some potential. On the daily, similarly, we still believe there's a few months more to go and still some downside potential. And on the hourly, now we're correcting up and we even made it above the corrective targets, which means that we may be able to envisage impulsive targets. Well, I won't go as far as that for now, but what I'd say is that there's a disparity here between the daily and the hourly. So until we resume the downtrend to match the daily and the weekly, we'll probably turn neutral on gold for now.
Neutral, okay. We said neutral, but also it's nice to start Monday with a glimmer of hope as well, as you mentioned. But thank you so much, Jean-François, for talking us through all the key levels there. It's been a pleasure. Thank you.
Thank you for having me.
Okay, well that's all from Jean-François and myself once more for this Monday programme, but make sure you keep clicking back to Dicoscopy TV for the hourly updates. Goodbye for now.